Alright, what's good, boys? This video is going to be basically a beginner's guide to trading. You know, what stocks you might want to watch, your support and your resistance, trend lines, your levels, and I might put in a little risk management and profit taking at the end. I don't really know yet, but without further ado, let's get it. Alright, just like I did in my last video, before I get started, I'm going to show you guys that I am a profitable trader. You can skip this part if you don't want to see, but yeah, I figured I would show you guys I am a profitable trader. Not really the best month. I mean not the best month, but the best couple, like 2 weeks. Uh, well, basically a week and a half. But as you can see, I had a really good trade. My boy Matthew Manuel, he's like actually one of my inspirations and shit. But you know, uh, he caught on the Discord. He wanted to put on QQQ. I charted it for myself. Thought that shit was looking good, so hopped in a swing put. You know, paid me, but then I gave it all back, bro. Literally every fucking dollar. But yeah, so then we got on a little down streak. Anyway, you guys don't need to know all that, but you know, you see it for the month, 40% a month. By the way, I did start at 5,800. I put 5,800 of my own money into an account that I don't have anymore, but I turned that 5,800 into 9,500, and here we are. So yeah. All right, boys, we're back over on TradingView. Now that you guys know that I'm a somewhat trustable source, you know, I'm not just bullshitting on my ass. Maybe. But, you know, we're back over on TradingView. The first thing we're going to get started with is picking stocks that you want to trade with. Oh, I forgot to mention this. If you guys already know, if you feel like you already know the information, fucking skip to a different part. But if you don't, you know, obviously tune in. Anyway, for me, if I'm day trading, which means buying and selling in the same day, like buying and selling contract the same day, I always trade SPY. You can also trade QQQ, but I prefer SPY. At least in my opinion, it moves in more like momentum-filled ways. Well, not more momentum-filled ways, but more like consistent. Yeah, a lot more consistent. At least in my experience. So yeah. So I would recommend trading SPY for day trades, just when it comes to buying and selling and even minutes. I had a contract today that I sold in a minute. Literally, I bought it and sold it the same minute, and I made $900 from it. But yeah, SPY moves in ways that are very predictable. Sometimes, most of the time, it's really predictable. It lives up to the charts. Like if you're charting it, most of the time it'll stay consistent to that chart. Here, I'll give you guys an example. So for this, until it broke out of this, it was just trending in this trend line, just sitting here, just trending. And SPY will also sit there and bounce off the same levels over and over and over. See, look at this. I'll get over how to chart and how to draw these lines and all that shit. Well, actually, not how to draw the lines, but where you should draw the lines. Because I'm not a TradingView fucking dork. I'm not the smartest guy when it comes to TradingView, is what I meant to say. Anyway, so yeah, but for swing plays, I would recommend DraftKings. I've noticed that it does the exact, like literally the exact thing I just said for SPY, except it does it over multiple days. So you come over to look, I already have this charted out. Well, not really, but you come over to DraftKings, you see it is just popping off the same level, like the same area, just over and over and over. So once this breaks, we're definitely gonna try to retest this 38, this right here, this 38.20, and then we might fall farther. But see, look at this double top. Comes down, comes back up, and guess what? It rejected. It really lives up to the charts. Another one. All of these are. This is what you need to find. I'm just recommending you guys stuff, but you guys can just literally just go type in random letters and just go look around and see if you see a stock that moves consistently when it comes to how they move when it comes to the charts. But yeah, I love trading this. I still have this here because I'm so proud of it. I'm never gonna erase this. But look, so Exxon was trading around the same range for like 3 months, and it just kept doing the exact same thing. It would come up, come down, come up, come down. This is a double top, by the way. Again, comes down, runs back up, double top at the exact same price, damn near. Then runs back down, comes back up, same price, comes down, comes up. You know, y'all see it. Anyway, I was so proud of this. I drew this before this happened. This little shit we got going on here. I drew this. I was so proud of it. So proud of it. I am so proud of it because it fell exactly where I thought it was gonna fall. The reason I thought it was gonna fall here is because it kept coming up just a little bit higher than last time. Just a little bit higher than last time. Well, at least it did this time. So I figured it would do the exact same thing once it rejected from this level up here, and it did. So yeah, I was so stoked, and I still am stoked about that. But by the way, like I said, you guys can literally just look up and see if they are following trends. See if they're following the charts, the patterns, shit like that. And there you go. You'll have your stocks to swing trade or day trade. Everybody trades their own stocks. I also like Robinhood. Lately, it has not been listening to anything. It's just fucking running. But Robinhood is another good one. John Deere, even. I know, like, you guys are probably thinking, like, who the fuck trades John Deere? But, you know, it respects trends and shit like that, like I said. I do exactly what I just told you guys that you guys should do. I really like trading CrowdStrike, by the way. But, yeah, like, I literally just type in random letters, and then I'll just click on stuff that I don't even know. Like, I've never even heard of this company, and I'll just see, like, if it has formed a double top or if it has done any of that, and then it's rejected, like how it should. Like, if it's treating the charts how it should. That's how you find the stocks that you want to trade. Alright, boys, we are now on to the next section of the video, which we're going to be talking about support and resistance. This is the most basic, at least to me, this is the most basic shit about trading, but it is so important. So important, so important, so important. Alright, so it kind of looks like a laser show over here, but I'm gonna show you guys what I mean by support and resistance. Gonna get rid of all these so we can get a clear screen. Actually, I'm not gonna get rid of this one though, because it'll help teach you guys. Alright, so look. If we want to look at support, we want to look at bottoms. We want to look at bottoms where it keeps bouncing off. It just keeps bouncing off this bottom. Keep bouncing off this bottom. So we're going to go over to the 1 hour. If you're charting for like trying to find patterns and support and resistance, I recommend the 30-minute or the 1 hour. We'll actually use 30-minute. But, alright, so support, this is just a great example right here. This is like picture perfect. Damn near. Alright. So support. You see all these red candles and how they just keep falling? Like the bottom of them keeps falling around the same, not the same exact level, but the same range. They're all falling to this 566.50 to 565.50. And it's just like, that is the bottom. That is the bottom right now. So look, if I was trading here, I already would have had the support here because it had already bounced off this area so many times. So when you see a big red candle come, you have to think like, oh, is this support going to break or is this support going to hold? So once you see it start to come back up, then you know that the support just held. Sometimes you might get a fake out and it might come back up and then shoot back down and then break the support. But, you know, that's why there's risk in trading. But, so support, you know, you want to see it come up, hold the support, and then bounce up. So you would normally use support for calls, but sometimes puts just to see if it breaks. Resistance is the exact opposite of support. Here, I'm going to find a good level of resistance for you guys. Alright, well, if I wasn't fucking blind. Alright, give me a second. I'm going to come back with a good example. Alright, back, and I have an example now. Oh, and I forgot to mention, your support will also come at like all-time lows, and same thing, your resistance will come at all-time highs. But I found an example, not the best example, but I'm a lazy fuck. What can I say? So we can see how it just keeps coming up. Like every time it comes up, it immediately rejects off this level. Not the exact level, but the same range. You see? It's just staying in this exact same area. This is called consolidation, by the way. But it also has support down here. You can see how it just doesn't want to move from this area because it has a resistance right here and it has support right here. So it's just going to keep consolidating until one breaks. And then when one breaks, you see how it goes. This is pretty dramatic, but you see how it goes. Like it falls pretty fucking hard. Like insanely hard. Remember, your resistance is kind of like your ceiling, and your support is kind of like your floor. Then once that floor breaks, then the whole house is going down, if you know what I'm saying. Same thing, if that ceiling breaks, you're going to get a way bigger ceiling. Your ceiling is going to be way fucking higher. Alright, moving on. Now we're going to be talking about trend lines. I'm over in the 1 minute now, just so I can give you guys really easy examples for you guys to look at. By the way, once you start trading and once you just stay around the market, you will see these like you don't even need the lines. Like you will make the lines in your head. Like you don't even need the lines. They're just kind of just there, I guess, so you can see and so you look smarter if the play actually happens. You know, it makes your chart look more, I don't know, more important. Makes the movement look more important, and it also shows you breakouts. So look, for your trend lines, basically you're just going to want to put a line at all of the tops and all of the bottoms. So like for this, the reason I have it like this is because you see how it keeps wicking up here? It keeps wicking in this trend line. Same thing with the bottom, it keeps wicking at this trend line. Sometimes when you see a big break like this could have been really bearish. By the way, bearish means you think the stock price is going to go down. But this could have been really bearish. Well, not could have been. This was really bearish, but it immediately recovered. But this is really bearish because it broke out of the trend line, and it wasn't just like a tiny little break out of the trend line up here when it was still forming. It was a huge break. Huge fucking break, like a dollar. No, not a dollar. Like a 40-cent break. That's crazy. Oh, and since I see it, you know, this is an example of support, just bouncing off the same thing. Anyway, so when it comes to making the trend lines, you can see it. Well, I don't know if you guys probably can't because if you're watching this video, you're new to trading, but like you can just see like the bottom of these wicks or the bottom of these candles, and it's just like, oh shit, they're all hitting around the same area at different times. Well, not same area. I don't know how to explain it, but you see it. You see how when it trends up, you put them at the bottom, and you can still put them at the top just to see where you could be even more bullish, you know, if you wanted to. Same thing with bearish. I didn't mean to put it all the way up there. Nice. But yeah, you guys see it. This is your most basic charting: support and resistance and trend lines. Oh, really good day for the market, by the way. Thought I mentioned that. And I genuinely don't know how, but I'm not even going to speak on that. Alright, this will be my last one, because I feel like you guys can get the fucking concept. It's pretty simple, but, you know. Alright, we're just going to ignore that wick, fuck it. I would say you can completely ignore a wick if it's just like ignored by the price action and it's immediately bought up or sold off. I would say that, but you know, other people might tell you otherwise. But I think you guys get the concept of trend lines. So on to the next. Starting off, I'm gonna get this bullshit off my screen. But anyway, we're gonna be talking about levels. By the way, levels are like the level the stock has been at, like the stock price, the level of a stock price that you want to pay attention to. I'll get to that in just a second. Your levels are going to be your support and resistance, by the way, most of the time. But I would also like to... The main reason I'm saying this is your levels of consolidation, which I love. I love consolidation. I love trading it. Well, I don't love trading consolidation, but I love using it to trade. So look, say this stock ran up, back up here. Say it ran this way, right where my cursor is, and then it fell. And then it fell right back into the same area, just right here, except, you know, over here because time passed. So we're just trading right here, and then it breaks. It breaks this low of the consolidation, which it did, and which is why you see it fall. But using past levels of consolidation also works, because that means that people think that's where the stock price deserves to sit at, because the sellers can't beat the buyers and the buyers can't beat the sellers. Therefore, we have an equal median where people think the stock price should be at. Anyways, that's why it is a really good example, or not a really good example, but a really good level to pay attention to, because that might be where you want to take your profit. That might be where you want to see break, anything like that. But look, as soon as you see the break, you see this, and then you see the confirmation of the break. Oh boy, I kind of talked about this in my first video, but you see how it falls immediately as it breaks the consolidation. And SPY has these examples every day, which is why I love trading SPY. This is why I day trade SPY, just because of this right here, because of the consolidation, and then when it breaks, it goes. Take profit and knowing when to get out of trades, meaning your risk management and shit like that, and knowing when to stop trading. That's a hard one. That's a really hard one for me. As you can see today, we were up 950, as I told you guys earlier. Literally 1 minute. I'll show y'all that in a minute, but literally 1 minute trade. Look at that. It says 5 minutes, but it was literally 1 minute. 1 minute trade, and I made 950 from it. And then I made 2 other trades and just lost fucking $400. Just threw it away. So, great. Anyway, still ended the day up, which is all that matters. You can't look into all that shit, but I always do. Alright, my bad. I had to sneeze. Anyway, I guess I'll show you this before I talk about it. I don't know. I don't even know if you guys care, though. I mean, skip 10 seconds if you don't want to see it. But look, so buy 60 shares, or buy 60 contracts at 10:08. Sell 60 contracts at 10:08. Literally the same minute, and it's now $1,000 more valuable. And then here we go with over trading, boys. Let's go. Hoo-yah. Ugh, that was corny. I'm sorry. I regret joining the Navy. Anyway, here we go. Over trading. Just $300 gone. Another $40 gone. Like, I don't even know what the fuck I was doing. Like, why am I trading with $261? Like, what the fuck am I doing? Anyways, I want to get into risk management. It's not going to take long, I promise. Risk management and profit taking and all of that, it's not anything but your doing. It is completely a mental thing. You control the trades you get in. You control when you get out of them. You know, shit like that. Like, you watch your account run down or you watch it run up. And sometimes you don't watch it run up enough. And sometimes you stop it from running down too much. It is completely all a mental thing. You have to, like, this is why I urge people to trade with a paper account first. Or just really insignificant amounts of money. Because if you trade with an insignificant amount of money, you are still seeing like money, like you are happy because you know you're seeing fucking money while you're doing nothing, but you also feel how it feels to lose the money. But with paper trading, you don't really get that, but you still get your way to feel around the market. You see what trades would do good. You know, everything that you need to learn. But if you're losing money, you know, while you're using a really tiny account, you still know how it feels to lose money. And everybody needs to know that. But really, there's not much I can tell you guys other than to keep your stop losses tight and your take profits also tight. You don't want to get caught in a trade where you're up however much money and then all of a sudden you're not, because you wanted to be greedy and you didn't want to get out of that. Once you start seeing the direction go the other way of any trade that you are in, if you're not about that life, get out of that trade and take your profit and be happy with it. No matter what happens for the rest of the day, be happy that you won that trade and you won. All right? And stop losses, you guys can go watch a video on how to set up a stop loss, shit like that. Anyways, thank you guys so much for watching my video. Same thing as last time. I will have my Discord link in the description. Thank you guys for watching the video. Peace.